On June 15th, Moody's placed the biggest French banks on review because of their holdings of Greek public and private debt. Well, since then, stocks of BNP Paribas, Societe Generale, and Crédit Agricole have headed lower. You can see them right there. Well, Everett Schenk is the chief executive of BNP Paribas North America. He oversees the bank's corporate and investment banking regional activities, and he says his bank's exposure to Greece is manageable. Everett joins us now with more. Everett, welcome to Fast Forward. Such a pleasure to have you in.
Great to be here.
I want to talk about, let's start off with Greece. Of course, this is a concern for many European banks. We've been following these stories closely. There were some big developments yesterday. We heard from Nicolas Sarkozy. Is that helping the bank at all? I mean, what are the fears that reside within the executives of BNP Paribas?
Well, first of all, it's at this point, it's obviously a geopolitical issue, and the French banks are involved, as are all the European banks. So this is an issue for treasurers or secretaries across Europe. We're involved in those discussions. As you've said, we suggest our exposure, 5 billion euros, is manageable. And we're actively involved in discussions, and we're hopeful of a positive outcome. So.
Tell me about some of the growth in the bank. Actually, why don't we go back to something I mentioned earlier? There are a number of analysts out there saying that European banks overall, French banks, are highly undervalued at the moment. You're doing particularly well. BNP has been moving up in the league tables in terms of bonds. Tell me a little bit about your growth strategy and where your current valuation is.
Well, first of all, the growth strategy globally is quite balanced between retail, wholesale, and asset management activities. Big push in Asia, Latin America, obviously across Europe with the acquisition of Fortis. So we're the largest European bank, continental Europe, also in deposits. So that's very interesting at this point in time. Here in the U.S., we have a very balanced business model. We don't do primary equity. Apart from that, we're very active, strong push in the commodity space, a full spectrum of exposure there. The fixed income business is growing relatively, and we're taking market share, so that's been good for us. And the equity platform has been enhanced by the acquisition of the prime brokerage business from B of A a couple of years ago. So balanced, global, committed here in the U.S.
Where do you think the second half of the year will take you, if there is a downgrade, perhaps? How much will that change business over the next 6 months?
Well, let's discuss the downgrade for 1 second. First of all, I think you know that there are probably 6 AA or better S&P rated banks, probably 10 for Moody's. 5 of the 6 for S&P are on credit watch or negative outlook. 9 of 10 on the Moody's side. So as far as we're concerned, relatively, our position as one of the major best rated counterparties in the world will continue. We have that relative position to our competitors. So our outlook, as a result of that, has not materially changed. So our business model at this point will, in the context of the current Moody's comments, is unchanged.
Well, let's talk about then just the macroeconomic perspective of a slowdown in Europe overall. How much is that changing your outlook? I know that you were looking to hire people. You had some aggressive growth plans. Some of those have been pushed off now a little bit. Could you see things getting worse? We just heard Credit Suisse today is cutting heads.
Well, first of all, we've had a very organic growth strategy. We don't ride the peaks and the valleys. Maybe some of our competitors do. So we've been growing slowly, and I think we can push off some recruitments this year. We're being very selective. 2/3 of our recruitments, almost 3/4 of our recruitments are VP and below. So our platform is very filled out. We're trying to enhance our existing investments. So today, I'd say we are being cautious, as are clients, so business flows are down. I think that's across the street. We're hopeful that the second half of the year will be better in terms of outlook, but today I think most of our clients are cautious, and we're being cautious as well in terms of our recruiting, but we're not facing a restructuring of staff or downsizing.
Let's talk a little bit. You talked about organic growth as being the focus. You've also done some acquisitions. Any on the near-term horizon?
No, I don't see anything significant in the near term. Would we do team lift-outs or in a particular area where we wanted to do something if the opportunity presented itself? Yes, but I don't see anything on the acquisition front. I mean.
And you also, very quickly, you have about 20 seconds here, Latin America. What are your plans for growth there? I do know you're looking to build up your structured finance business in Brazil.
Right. Well, Brazil is a big push for us. We're opening a broker-dealer operation through Colombia, which is interesting for our fixed income business. We have aspirations mainly in Brazil, but also in Mexico, Chile, Argentina, and Colombia, which are our main focus.
All right, Everett, we have to end it there. Thank you so much for joining us. Pleasure to have you here on Fast Forward. That was Everett Schenk, Chief Executive of BNP Paribas North America.